Welcome, everyone. It is morning time. What a difference. I saw a funny comment. Welcome to the Kendall Report. And this is the new format. It's going to be, I think, a work in progress, but thanks for showing up, everyone. I saw a comment that somebody was looking for me last night. So was I. Funny thing is, I was at the office till 7, so that's kind of funny. Anyway, welcome. Let's just get it right away into some of the stuff. I'll explain some of the things that will be going. Hopefully you guys saw the schedule that I'm planning on Twitter. So let's get into what's going here in the markets early morning. We got a bid across the board here. We got the futures up 15 handles right now. NASDAQ up 0.47. And the Russell is up 1.13. So we're seeing another bid here in the markets from that standpoint. Actually 0.58 on the RTY. That was Friday's quote. So the setup right now is somewhat bullish just because of what the elections. This is not an election show, so I'll just touch on a few things because I think that what we're really seeing here is that the markets are somewhat enthusiastic on the potential of a shift in neutralizing some of the things we've seen what's going on. We'll leave it at that. And I think that that's at least for the moment going to drive it. Tomorrow was going to be election day, and I think markets are going to be doing nothing for the next couple of days. And if you look at the news cycle that's coming out, I'm not going to go, I'll go through some of this a little bit later, but there's really nothing until Thursday, and we have CPI coming up after all this. So we've got plenty to talk about this morning. So let's go back into the opening. The plan is this, is that I'm going to just talk about the opening setup. There's going to be about a 2.5 minute break. Real quick, I'll have quote screens up for you. I'm just prepping the last thing, getting ready for the opening bell. So we'll be here, and I'll bring you up to level 2 screen so that we can see exactly what's going on, look at order book, look at a lot of other things. Real quick, Treasuries, basically flat, 4.165 on the 10-year, the 5's 436, and dollars flat, down just a touch. And we're looking at crude oil just flat so far on the setup here. So as far as everything goes, it looks basically a lot of things are neutral here setting up. So one of the things I'm going to do, I have a couple minutes here to talk about, is I'm going to be using the algos. We're going to try to do the best to set up the first 3 hours of trade every day for you folks. Those of you in the live room, I will see you there at the typical time, 1 o'clock. Eastern time. So on Monday, Wednesday, and Thursday, I'm also live in a live trading room. It's a private room. You have to join to get in there, but you can buy the indicators, and you get in there for 30 days for free to find out what that's all about. Anyway, as far as anything else going on out there, you know, we're just looking at a pretty typical setup. Gold's actually managed to get a bid. I was talking about this as well, and I'll be going through this today. I hope you guys saw the schedule, because I plan on tomorrow, on Tuesday, make sure you tune in. I'm going to have some stocks. We're going to actually have one segment that's on stock. So just real quick, let me see what time we got going here. We're at, so I got about 2 minutes, so let me just get you orientated on this. And this is just going to be, depending on what's going on overnight, there'll be different elements this time of the day. But the plan is to go through the week to have different segments. I'm hoping, I talked to several people over the last several days trying to get set up on Wednesdays. We're going to have about a 20-minute segment where I bring a guest in, and I'm going to bring in some of my friends. I'm working on getting some folks in the door. Sometimes it may just be a macro outlook by me, but there's going to be a lot of diversity that you didn't have before in the previous show. Still cover all of the key elements every day as we go through that. So I'm going to go ahead, folks, and get you set up. Rooms starting to fill up pretty good. It's a new time for me, so folks aren't used to me being around, and I probably have alienated some people on the planet that used to be there every night. But let's go ahead, and I'm going to take about a 2.5-minute break, and then we'll come back and we'll get into the entire session for the next hour. Okay, folk, I am back. We've just got a couple minutes here to the open, and we're still seeing us trading around 93. We caught a little bit of a bid here in the last, I'd say, half hour as we were coming into the markets. Overnight, we did, if you recall, we came in about 26 handles lower, and that is that was in the evening session last night. So we're definitely seeing some of this complete recovery, and I think it had a lot to do with some of the short covering that we saw on Friday. So just a couple of minutes here. Just for the record, this is my very favorite time of the day. Flashes me back to the days when everybody was hustling and fighting your way into the city to get to the floor to start trading. So it should be something that we're going to be able to really have a lot of fun with as this becomes more comfortable in the new thing. Already, I like my day. It's 7:25. We got about 5 minutes to go. So I just want to just thank everybody for being really super flexible with this whole thing. And, we've got about 300 here. I'm hoping that the algos will start to like us. And make sure you hit the like button and subscribe and all that good stuff. So just hanging out here, not a lot to look at. I was looking to see if there's any recent news coming out. And there's a lot of noise coming out of the ECB right now. I am working on something just while we're preliminary stuff here. We got everything set up. One of my things that I want to watch for here is this indicator that I have on the screen. This is a level 2, the place where I'm sitting in front of as far as my face blocking the screen. That's just the liquidity bars, but you're going to be able to see the time and sales level 2. This is stuff you folks aren't used to seeing. Those of you in the live room are. And I'll bring up some, once we get started here, we'll go through the algos. I haven't even looked at any of this stuff. So it'll be, as always, live analysis as we get into the session here. Okay, so we've got, what I was going to say is my favorite time is we used to always fight our way into the city every morning just to get to hear that first bell of the day and the markets take off. It's almost like a horse race, and they're off. And so I believe my computer should be set up. We should have an opening bell, all kinds of fun stuff here. Yeah, Stuart, appreciate that comment. I probably am more positive. I'm usually beat down by the end of the day. When I do the night live stream, I was at the end of a 10 or 11 hour plus day. So yeah, this format should work a lot better for all of us. About 2.5 minutes to go, folks, and we're going to have the bell. And one of the things I want you to watch for, and we'll get to see this, the first hour of trading is also a very significant part of the day. And hopefully my plan is for the channel is I'm going to be able to set you up pretty good for those of you that are index traders and just kind of get things set up, and we'll run the algos and everything. I'm going to go through a lot of the same format that I normally did in the evening. Difference is I'm going to go through the database here shortly and all the elements. Like I said, make sure you check out that schedule. And in fact, I will make sure we get that schedule posted in the description on the replay. I will talk to my associates there about getting that done. So we'll have all that done as well. Yeah, I'm going to go through the PPMs, the whole bit. We're going to go through the whole, we're just going to do the opening, get that set up, and then we're going to go on to normal analysis for the next half hour or so. We'll take a little 2-minute break, and then I'll come back and do a 20-minute. Then I'm going to be doing a summary every day of at least what the expectations for the day. So this will just come out of real-time analysis and what's going on here. So yeah, we're almost there. So let's get ready. This indicator where I'm putting my cursor, watch out for that. This is going to get some pretty erratic volume set up here. Yes, it did. And this last minute's taking forever, so any second. There we go. And they're off. Okay, one of the things I just want you folks to watch over my head here is the level 2, and you're going to see exactly what kind of erratic behavior we're getting here. You can already see the volume starting to increase. We got a little bit of a bid. They're rallying. If you look at the 1-minute chart, just went through the RTX mode, so a little bit of enthusiasm coming in here. As far as the order book, I'll start to get you folks up to speed. A lot of you have been in the live room, you'll understand, but the order book is pretty thin at the moment, and that's why you see these erratic jumps. There's only about 15, 20 contracts on each bid ask. So if a big order of 200 or 300 comes in, it just runs the markets for like 200 or 300 points. But you can see the 1 minute is just blowing up here. We just got the first update here of the 1 minute pattern. So let's go ahead. I mean, that's pretty much, here's what I was showing you over here. If you see my cursor just to the right of me, you can see the big spike in volume. This is a volume rate of change. So it just gives you the rate of change of volume. You can see it increases. This is going to stay like this for for the next hour or so. So we'll come back to this chart and start to take a look at that before we get into that. So positive opening, up 0.5%, up 18 handles right now, trying to challenge the area. So let's get into and take a look at a couple things, and let's set up market grid, stuff like that for the session. So we come into here into the daily E-minis. I'm just going to run through market grids so you folks can get it all set up. So here we go. We're looking at the overnight 37.38. We had S1, S2, 37.47, 37.19. We hit right into that range. R1, 37.98. So we printed just above R1. R2, 38.26. So I wouldn't be surprised to see basically almost an S2, R2 today on this setup. And like I said, I'm going to go through the algos next, but I want to get you all of the market grid numbers so you folks can get this stuff down. So on the NASDAQ market grid, we saw a low of 10,751, just above S2, which was 10,698. And let me make sure, I just realized that I am in the way. Let me get off screen, actually. And what we're seeing here is a bounce off that level. R1 right now is 10,983. We've been just right up to that. The high is 10,972. And R2 is 86. So 086, 11,086. Let's get the RTY, and then we'll get into some other numbers here. So RTY had a low of 37.38 and S2 37.26. So all of these are set up the same way. Almost an S2 print. Kind of went into no man's land between S1, S2. R1 38.04, the high 05, and R2 38.32. So what we're going to want to do here, folks, is just keep a handle on as far as those numbers I just put out there. We're trading around the R1 level, and we'll watch for any kind of rejections off of here, because we can get that. This is a pretty solid resistance, as well as 3,800. So let's go ahead and we'll move over to the algos, and I'll bring those into full screen here in just a minute. So we'll just go through the S&P first. And this is a 1-minute graph, so we're going to start off every day with a little shorter view. You see we're getting some volatility. We did get a rejection off of that open there, and so we got a pretty decent rejection. The algos are suggesting that we're going to stabilize here and start to get into basically a sideways pattern. We go to the next chart that we're looking at here is the 1 hour, and this is important. I'm going to set this up from this standpoint. Is the hourly is suggesting that we're going to kind of flatten out here and drift lower for the next 2 to 3 hours. Looks more like a stable market. There is an upward bias here. The PPM1 on the hourly chart is at 0.44. So that's a fairly decent angle of attack. That's going to supply some support here at 37.85. And the next support level under that is down at 57. But it looks to me that we're just going to set up some kind of sideways range here. Let me just put up what I'm going to do here. I'm going to change this format than we usually go market by market, and we're going to go through just taking a look at the futures, because I want to go through the hourly graphs on all these, get the setup. The interesting thing is I've got all the setup here from the standpoint. We look at this most recent action. I have the Fibonacci projections. This is a 1 hour, and we'll go over to some of the other expectations as we go through. But the 1 hour is actually got price at 11,066, 11,063. 066 would be basically a move toward the R1 number daily that I just discussed. And then the high 11,223. These are projections. What's interesting about the algos are just suggesting that we're going to keep this angle of attack here for the next couple hours, which suggests that we're likely to see the markets just kind of drift higher, should stay above key numbers. 108.59 is the 21 period moving average. And this is really a pretty decent setup. We'll do RTY. And like I said, the format that as we develop this show, I want to make sure we have these expectations. Now it's interesting. RTY suggests, the algos are suggesting that we're going to drift off and fade back at least toward this 21 period moving average here, which is pretty solid. We're trading right on the 10. 1809 is the 10. Last trade 1808. So we're trading right on it right now. And it looks to me, and these are all hourly charts we're looking at right now. Okay, folks? So we'll go back through our normal format here in just a minute. But I want to get set up for the day as we come in to the next couple hours. So you folks now have a little more guidance real time than guessing 14 hours ago what the market was going to look like. So this, but this is what the algos are set up. We're just going to continue and go through some of these other patterns here, and we'll go back over to the daily on the S&P. So now we'll go back to S&P. I'll go ahead and I'm going to go normally like I do through the S&P, NASDAQ, and Russell here. All right, so going through the S&P daily was turned up pretty decent. The PPMs are suggesting that the 10 is going to stay into an uptrend here, which PPM 2 and 3, everything is looking like we're going to continue to just keep on this bid. We're almost looking at the top end of this range here on the 1 day pattern. So we're just saying, let's go over, I'll go through the weeklies and the longer term after the break. That's what I'm going to do today. So we'll set up some of the longer term divergences and what's going on there. So let's, so all of these patterns that are set up here are continuing to suggest, and I've talked about this a while back, is I'm still expecting to see that the market's going to move toward the 200-day moving average. And right now the 200-day is 40.83. There's a lot of clusters up here around 40, 40.20, 39.80, 40.20. It looks like that's where the markets want to seek. And if we go back many, let's say almost 2 weeks ago, if we go back to the 13th of October, that's where that reversal pattern came out. And we just continue to see, we had 2 reversals in here. The algos have been actually pretty accurate throughout this. And I know all the folks that have been negative on the markets have been telling me how us bulls, I wouldn't call myself bullish, but I am positive in the markets right now. We still have, I'll go to TradeStation here before we flip off and go to the NASDAQ. But let's just take a look at that real quick here. And I'm just going to put on a modeling strategy. And we still are long from that 37.71. So basically it's flat. This pattern is set up pretty good. I'm going to draw a couple things in here, and just so you can get a pretty good feeling for this. So I've been talking about this pattern here, where this is the bigger pattern, and right now I won't go into any theory right now, but this is set up so that this pattern here, this is the 200-day I'm drawing across here, that we should at least test that. The possibilities are, since the length of this wave 1, this is a corrective wave or a right shoulder right here, and this is likely that we could see something like this start to run out. This is not drawn to scale, so don't say I'm thinking it's going to 4,600. That 4080 is the number that's going to put us right at that 200-day for the moment. So that's all that I would say is the way it's set up right now. And a lot of times these patterns that are set up will come in, and what they'll do is this next leg up will actually represent a more of a pattern that we're likely to see move only in a portion of the length of wave 1. So it might be 0.382, 0.5, 0.618, the length of this first wave. So I'll leave that at that for the moment. And one of the things I do plan on the new channel setup is I believe Wednesdays also will be a flexible day for me, where I have a segment where I might actually feature doing ETF hacking, doing other things. So let's stay on track here. And let me just fix one thing. All right, so let's go on to the NASDAQ. We'll stay here with this pattern here. NASDAQ is on the dailies continued to set up a potential rounded bottom. NASDAQ has been weaker. We look at the lows. We had 10,484. We had a 10,636, and we just about made a new low, but we held that low that we made back on 1013, and it's trying to increase. You notice PPM2 is turning up. All of this stuff is looking pretty good, and it looks like the resistance here on NASDAQ is much different than the setups on the S&P. What we're looking at here is that we're going to see a move up into these moving averages, and you can see there that's 11,222, 11,148, 11,366. All matches up with some of those Fibonacci numbers that I talked about earlier. So make sure that you're noting those numbers. And I think tomorrow is probably going to be a lot of volatility as just out of excitement of things. The NASDAQ is trying to turn green here as we speak. And so we now have futures are kind of chopping around here. We'll come back to the intraday stuff here as we go through the presentation. So taking a look at RTY, just want you to also notice that the PPM2 is kind of the driver here. It's up in trend level 0.28. PPM1 is also 0.28. So we're definitely seeing some upward momentum. We've got 1816 as a key number. We get above that, then we'll probably retest this level. I'm going to just draw in something very quickly here. Similar pattern to what I was just talking about, where we have, but this is much more bullish. And I've talked about this this pattern, and it's crazy that this is setting up. We don't have any current Fibonacci's or anything like that is out there, any Fibonacci projections of any sort. Nothing like that is out there, and so there's nothing really to pull off from that standpoint. But the PPMs themselves, even the WaveTech 200 on the 200 period moving average, is just rocketing, suggesting right now it's suggesting that we're going to challenge that level and get through it, which is at the moment is, get the exact number, 1882.88. All right, folks, we're going to stick with TradeStation here. This is the 10-year. I've got enough time to probably get through the 10-year and the crude oil here before the break. We're going to have a break at the top of the hour in about 12 minutes, and then a just 2-minute break, and then we'll run the rest of the show. I'll do some longer-term analysis since it's the beginning of the month. Really, this is the first full week, and we've got a lot to go on. I'll actually, before we set this up, I'll talk a little bit about some of the economics and stuff like that. We usually start with that area, but the bottom line is with the opening, I want to focus on the opening, then on the second half, we'll get into news, economics, and some of that other stuff in that second half once we get through this. Yeah, so the S&P's selling off. If you recall that the algos were predicting that we would see sideways and start to drift lower. This is exactly what is happening here right now. S&P's was down to only up $1, so we're definitely seeing some pressure come right back in the market. NASDAQ got positive for a heartbeat and turned south again. So let's take a look at the 10-year, and it's interesting because I've been talking about the 10-year getting locked in a range, and I'm going to flip this over to a weekly chart. And this is what I believe is going to drive this area up here. I talked about the market grid getting into what I call a box formation, where basically it boxes this thing off. We do have the 10-week moving average actually rising through the market grid, which is basically a positive pattern. What usually will happen is that is like your extreme support. So this is the weekly chart. So we're looking right now is that number is going up about 10 basis points per week. And this is the value, 3.87 is the number. And if we look at the market grid for this week, we're looking at 397 is S2, but S1 is 406. We'll call it 407, 406.9. And R1 is 424. I don't think, unless there's some weird number coming out of this on Thursday, getting the CPI number, maybe there's something there. We could print up to the 4.24 level to 4.34 would be R2. That would be the extreme. But I think no matter what happens here with the interest rates, we're going to see them stay within probably the bounds of an S2, R2 from extremes, probably staying between 406, 424. I think we'll see some stabilization. We do have a lot going on this week, folks. So between the election on Tuesday and then on Thursday, we've got CPI. There's going to be plenty of folks to take a look at some stuff. And I see some comments here on the channel, and people are talking about silver. Guess what? I have a whole day set up just for commodities, metals, the whole bit. That's going to be on Thursday. So we're going to definitely go through a lot of this stuff. So make sure you mark your calendars for that, because there's just a lot going on. I'm super excited, folks. I'm just going to break the tone. I'm just super excited about having this opportunity to broaden out and give you a lot more information out of this channel than what I've been doing in the past. It's been fun. It's been a couple years, and I've learned a lot and appreciate it. So back into the 10-year. I think it's. I think that's pretty much all you can say there from that standpoint. Is that we're going to get locked in a range here. We're not going to go down a lot. We know that, and I think the ceiling is starting to form here. I'm not predicting a top, but I am predicting this at least a short-term ceiling. I'm going to go back to the daily chart, and I'm just going to let me go full screen so you can see this better. Is the new objectives that we got was for a high target one. These are the Fibonacci projections: 468, 497, so 5%, and 515. And one of that's these values up here. I'm going to flop back over to TradingView for just a minute here, and I'm just going to put the let's go ahead and add the indicator here. Let's add the Fibonacci projection so you can see this just a little bit here. I'll just bring it over. You can see these are the same numbers here that I was showing you in TradeStation. But what I want to show you is what's interesting is what the algos are doing. The algos are suggesting that we're still going to pick things up a little bit here, and we're going to see the PPM1 get up to a 0.64. What I keep making sure I explain this, and what this means is when the PPMs are being projected to go like this, right now they're negative, so they're still declining. It just means if we stay over the 10-period moving average for a couple more days, momentum's still going to start to switch to the upside from negative. And then if that happens, well, what we start to see is though that 10-period moving average is going to be our primary trend line going up. And then we'll be able to potentially start to move toward these higher numbers. So, like I said, we have CPI coming out on Thursday. Rates are a long ways from being done and going up right now, folks. I know that's a common view, but it is. Everything that I'm seeing in my work is telling me exactly that. So let's go ahead, and I have just enough time to get through crude, and let's go from there. So we'll start off with the daily charts here on the crude. And it's interesting because crude's basically, from the algos, are suggesting that we're looking at today, sometime between today and tomorrow, that we're actually putting in a little bit of a high. We did get an RTX sell signal on Friday, so we're definitely looking at a couple days flat, but the algos are suggesting that we're going to start to see a decline and come back into around this range. And I know it's a broken record, but 86.92 is the range. We're not going to get much above that level. Okay, we're just going to be stuck in there. So, well, basically, I would suspect just to stay in that trading range and keep things going. I won't go through it today, but tomorrow we'll probably talk about the XLE. We'll talk about the energy stocks, because last week the only sector was energy, up 2.4 again. So we're just continuing to see that energy is the primary source of any kind of income if you're involved in the markets at all this year, other than trading. I mean, from an investment standpoint, and those of you that are our institutional clients, you know what I'm talking about. That's been the only place you've had to have had a bid in. Unfortunately, most people don't have a big enough bid there, because there was a pretty good year this year to be solved if you forgot about everything else and paid attention to what was working. But this crude pattern is suggesting, let's go over to a weekly just to get a little bit, and I've talked about this pattern as well, is the weekly algos are also suggesting that we have several more weeks of advancing prices, and we're seeing the upward projection. I know I've talked about these numbers quite a bit. We're looking at upward projections right now, 107, 118, 126. I'll go with the 107, 118. I think the highest that we got here was 130.50 on that crazy print that back on in March. And we've been drifting lower, but this pattern is setting up here now is starting to get a little more positive, but I think we've got a range probably up at the upper end of the markets from the standpoint of the prices hitting the 40-period moving average. That's 98.36. That would be one level above that 92 handle that I talked about as far as everything starting to set up there. So as far as, so I've covered all those markets. When we come back, I'm going to bring up the weekly charts. I'm going to have, the weekly, the monthly, and the quarterly charts on the S&P. I'm going to focus on those. We're going to talk a little bit about a focus on this month going forward. And I'll probably, after the, I'll also start to look at maybe we'll go through the database, and I'm going to look at some sector rotation. I was really amazed at the database. So we've got a lot to talk about in the second half of the show. And I think that the patterns that are setting up across the board, and I don't know how to say it, but I think things are getting more and more positive as we go through. And that 3502 low that we had back on, in what was that, October, that's probably going to be the low that lasts for a while. And I know the pain is starting to get pretty good from those of you that might still be short. It's still, I guess you still have hope, but I don't think it's going to work out. And I don't see any new highs or anything like that. So let's go ahead and take our break early. Got about a 2.5 minute break. I'll come back. We'll hit these long-term stuff. We'll go through, actually, we're going to go through the database. We'll talk about that, and then we'll hit the long terms and just see. We'll work our way into the final half hour of the show. The plan is, by the way, folks, is that we're going to do roughly hour and 15 minutes every day. And hopefully that will give me enough time to get through these different segments. And like I said, this week is the first week running the show like this, so there's going to be a lot to learn. I'm going to finish today and go, should have done this, could have done that, all those kind of things, and it'll just get better as we go forward. So let's go ahead and take our break, and I will be back here just in about 2.5 minutes, and we'll be ready to go for the second segment. Yeah, unbelievable. Yeah. Anyway, folks, yeah, let's try this again, huh? Really appreciate that. Sorry about the sound. I'm going to put a big sign on my desk, make sure the sound is turned back on. Anyway, what I'm saying is that a number of things that are I'm going to be discussing is as we go forward here is I'm going to go through the database here in a minute. We'll talk about some of the things that are going on there. But I was talking about the list of stocks over here in the middle of the page, and TQs are on top. 45 million shares traded of the TQ. And then I was mentioning NEO, PLTR getting crushed. Haven't seen some of these names. Meta, rumors are Meta is going to completely get destroyed, and they're going to do mass layoffs. Very interesting. You know, it's like anything, folks. You make a big bet, you're going to be right or wrong, and you have to be willing. Maybe sometimes, Zuckerberg's going to hang in there until the end. I don't know. I've been criticized for probably 5 years ago. I said, 5-10 years from now, you won't even know what Facebook is. Of course, Facebook isn't. It's Meta, so I guess I was right. But I really think there's a lot of downsides. So tomorrow we'll be focusing in on stocks and going through things like that. But I've got that up there, so when we're on break, you can see what the actives are, and even it's sort of interesting. I have a lot of sorts I can do on this particular segment to get into those top stocks, but we'll go from there. So let's go ahead and let's start talking about the database and what basically is going on in my world, which is the portfolio management world, and what we're looking at here from this standpoint. So let's go ahead and start to take a look at some of the at the WaveTech database. Okay, so we're going to go through the database right now, and then we're going to head back to economy and some other things as we come into this final half hour here. It's interesting because we had 639 new buys, 135 sells. I didn't think we would see that kind of action after last week, but we actually are getting traction on the intermediate. We're nothing great yet. This is the view of this, and I have to reload this because this is not an updated view. So now you'll get the right numbers. So I apologize for that, but the bottom line is what we're seeing here on the database on a weekly basis, and we did get a little traction. On a daily basis, we had 108.6 buys, 345 sells. We're at 42.84. If you recall, on Friday, we had dropped back to 40%, just below the 42, right back over 48. And that little rally at the end of the day on Friday was enough to skinny this thing up a little bit. Now, one of the things I want to talk about here is I'm going to go full page on this, and I want you to notice, and I've been talking about this right now, 9 to 12 sectors are actually long, and they've been long since early in October. We're looking at October 4th, 5th, and 6th, and then October 12th and was another round, and then around the 24th we had some more. But if you look, energy just since the 4th as a sector up 14%. We got consumer non-cyclical up 7%, and we're just seeing the other big bid is transportation. So as we come into the week, I'll decide which area I want to focus on as we come into the stocks from that standpoint. and that will be the most likely sector I might focus on is transportation, because there seems to be something going on there. And I'll cover that in more detail as we go forward. But I'm going to go over to the research on the weekly, and you see no sectors were long, but we did get 2 sector buys that come in this week, and I wanted to feature this: the healthcare and transportation now on an intermediate basis coming in. We do have services that have been on for a while since August. It's down 2.5%. I'm sure there's some good nuggets in there if we were to break down, and we'll do that on another day. But I did want you to see that there is some positive rotation starting to come in to the database as well. And I think that's going to be, that for me is a little encouraging from that standpoint. So I'm going to come back on screen here for a minute. I want to talk a few minutes about the economy and some of the things coming this week. We haven't covered that yet, just to make sure we get everything out there. We had a consumer credit coming out. I didn't notice if that came out or not. I haven't actually looked up some of the numbers here, but we had but Thursday is really the only day we have anything coming out. Thursday CPI, we've got claims and the continuing claims, and they've been pretty much in those range at 255, 260 level as far as expectations on the claims, and continuing claims have been just under 1.5. And I think if they get above that, maybe the Fed's going to start smiling and thinking they're finally destroying. They're trying to, as I've said before, they're trying to break something. And that's the key element there that everybody is waiting for, is what's going to break. Is it going to be the banking system? Is it going to be just employment and jobs just implode? What is it? You think about all the talk around Apple and the lack of demand for new phones at Apple. I think it's getting interesting. Cook and the boys are saying that it has to do with COVID zero in China, but it's starting to look like nobody really wants the new iPhone. I think the iPhone Pro has been pretty good, but everything else, their general products happening. And I think there's something, getting down that trail for a minute, I think there's something that's happening here. Is for the first time, we've never seen some of the, Apple's been Teflon coated. They've never had to deal with any kind of real demand change or things in their business. And, going from hiring 20-30% of people a year to zero, or flattening or freezing, as they call it, all of these things, they've never had to adjust their business model. They just go forward, they spend money, they want things, they just go get it. They still have tons of cash, don't get me wrong. But are you going to spend a bunch of cash on building stuff that nobody's going to buy? So I think this is finally the point in time that we're going to see Apple really challenged as running a business. I mean, it's pretty easy to run a business when everybody wants your stuff. But what happens when demands change? What happens there? So we'll save that for another time. But just a couple comments on that stuff there. So last week we know we got a job report, everything, and one thing that no one talked about on the employment report. Employment went from 3.5 to 3.7, and then we did see jobs come in pretty good. But it's just interesting. Everybody is taking and twisting their narrative on whatever their position is or their view of what's going on. So last thing I want to talk about, and then we'll go into some of this longer term. We've got about 10 minutes that I'll go through, and then I'll come up with a summary of the day. We'll do a quick review and the close of the session. It feels like I want to go for like a 3-hour live stream. I'm not ready for that. So I'm going to cut that off. and we'll finish here in about 15 minutes, folks. So, but yeah, earnings. There's quite a few. 1,817. I kind of thumbed through them real quick to see if there's anything earth-shocking. Tuesday, we got Disney, Oxy, DuPont. We got a bunch of the oils coming out this week as well. So there's some things there that I think are could be interesting, but there's a lot of earnings. I think we had 1,622 last week. We got 1817, so we're full on in earnings season and all of that. So, but I think the real focus is going to be as we go forward is actually going to be the election. I think there's going to be a number of things that are going to go on because the balance of the Senate and the House are likely to change. And it's sure, I guess if the odds are right, if you look at even on liberal stations, they're talking about, better than 50%. It's probably better than 60 or 70. I think folks are pretty frustrated, and it's one of those pivot elections that we're coming into. Whether it means anything in the end, because you basically, for the most part, get the same jokers that you had before on the other side come over. So it's not like there's some great big hope here, but maybe, like I said earlier, it potentially will neutralize some of the crazy stuff. I'll talk about this maybe on Wednesday or something, depending on what I end up doing. But remember MMT? Remember how good that was going to be? That was in hindsight kind of funny, right? That actually everything that we thought it would be, it was, which was inflationary, and it wasn't going to work any different than it ever has. Okay, so let's go ahead and I want to go into some long-term analysis. Got a few minutes. I'll come up for a final comments for the end of the session, and we'll call it quits. And I'll see you tomorrow morning, which is really cool. This feels good so far doing the show like this. So anyway, I guess it's different starting the day and being energetic versus at the end of the day and I'm burned out. I put a lot in. So let's go ahead and let's get into some of these longer term aspects here. All right, folks, let me bring this on for you. And this chart here is the quarterly chart. Now, we haven't looked at this for a while. The original thoughts that I had going back was that we were going to have a positive quarter last quarter. So I thought we were going to get two negative price quarters, not GDP or anything, but actual price. And then I thought we would get maybe a positive month. Well, it happened differently. We got 3 consecutive moves down on the quarterly. And this is probably, and I have no idea, folks, I'm going to hedge this up pretty good, is these algos that we developed a couple months ago. They got released, I believe, a touch over a month ago. Just for the record, those of you that have them, I just finished the raw output for the update and how to use the algos. That's just needs to be edited and published. So we're getting close. I just got probably a couple hours to spend with that video, and I'll have it out. I did get everything done. So I've been promising everybody I did get that done yesterday. So, but the algos, I have no idea using them on a longer term chart like this, what they're going to be. I ran the script on this, which was kind of interesting. I won't run it for you today. So in TradingView, you can go back and run and have it come out bar to bar, and you can see the forward looking, what the algos were doing forward looking. I would just tell you this, that they were pretty accurate all along. So I don't have any reason not to believe them, but these are super long projections, right? So let's just go ahead and get into it. I just want to make sure that you understand that. But what's suggesting here is right now the PPMs are PPM1 is 1.73, and that is we're trading below the 10 quarter. So I'm trying to get this right for you. The 10 quarter moving average, we're trading below that. And if we stay below that, what it looks like is going to happen is ultimately it's going to roll over. So we're going to start to see the 10 quarter moving average decline. If that indeed occurs, that's going to happen second quarter next year, the earliest. And remember, each bar you're looking at on this chart are 3 months. So this is beyond watching paint dry. This is watching, watching some major project, 10-year project get built, right? So because just on this August that I have on the page here, they're looking out 10 quarters. So you're looking at 2.5 years out. But what they're suggesting, at least in my estimate so far, I've seen that the 3 to 5 projections on these algos are pretty accurate, and just in directional movement, magnitude fairly good as well, okay? But especially in the magnitude of and direction is really accurate. So what they're saying is that ultimately that we're going to start to decline, and the PPM, the one thing that's going to hold this market together on a quarter-to-quarter basis right now is PPM2 is suggesting that it's going to remain at a 1.53 plus value, which means that it's rising fairly substantially. And that number is 33.93 right now. And so that is going to be a bottom. So if we did print there, that would be a new low. Okay, so that'd be a new low in this pattern, be below the 35.02. This is actually the cash. The low was 34.97. Let's see if I can get that from last 30. Yeah, I can't get it from that quarter. Can I get it? Yeah, 34.91. There it is. So 34.91 was the low of this pattern. So if we did hit that 21, that would be a new low down to that 33.93. So that would be a low by another 100 points. But there should be substantial amount of support at those levels. So as all of these algos, though, are showing that we're going to flatten down or get negative. And typically what will happen from a moving average pattern here, just for a second to understand what I'm talking about here, is that when you have a rising pattern where you have a 1.7 value on a PPM2 and you still have a positive value at the moment. I'm sorry, PPM2 is 1.8, 1.7 is the PPM1. When you have those two, you're going to, most likely it's going to be almost like a channel line for a market. So those two values, which are 40.14 and 33.93, are going to be the dominant pattern that you're going to see from the standpoint of how this market's going to trade on a quarter-to-quarter basis, okay? So that gives a lot of leeway for us traders and people like that to deal with this thing, but that's what is set up here. So I just want you to understand that the upward slope, people have said, no, the market, we're in a bear market. We're not on a quarterly basis. We still have a secular bull market going on, and this market started back in really pretty much in 2009 and 10, and we've just maintained it. I haven't went through some of the patterns here. I'm not going to do it today. I don't get too technical. We don't have enough time for this. In fact, pretty much this section is just about done. I'll probably we'll switch here in about 2 minutes, and I'll come into kind of some closing comments. We'll do a quick review of where we are in the market since we've had our eyeball off the market, so to speak. as we've been going through all the details here. So we'll go back, recenter, see how the algos are set up, and we'll call it quits, and then we'll be back tomorrow at the same time. But I really think it's important to understand that there is an upward channel here. And I've talked about this right at 4,100 is most likely a ceiling. Here's another evidence. You know, I like these clustered numbers and things of that sort. So just know that the numbers are, we've got this channel that we're likely to stay in. And there's room to the downside. We could actually make a new low and bounce yet again. So there's still that residual move that's out there. And I actually don't think we'll make a new low. I think we'll work towards 4,100, and we can talk about it when we get there, and we'll set everything up. So let's go ahead and go back to some final comments here, and then we'll wind down. So I'm going to flip over to the algos again, and just so we can take a look at all of that stuff. So let's go ahead and get over there. So I'm over at the 1 minute chart here. I mentioned when we were out here, I said that 1 minute was suggesting that we were topping out and we were going to drift lower. We've drifted lower. We're very close, probably 1 or 2 bars from a bottoming pattern to set up and start to see some stabilization. So we should see the market stabilize fairly good there. And it was pretty accurate from that standpoint. I just want to see if I can find, this is the 3 month. I'm just going to have to convert these on the fly here, folks. So the 5 minute chart is, if you recall, it was setting up kind of a stabilization in the pattern. That's pretty much what we've done. We got the market grid set up here, and probably the primary support line that we're looking at is the 200 period moving average. This is a 5 minute chart, folks. So we're going to just take a look at this. This will be the pattern that is set up from the, right now we're looking at the 200 at 37.80. I was mentioning earlier that 37.85 was the support level when we were looking at the markets a bit earlier. So that number is pretty much stayed intact. And those of you who have the algos and have the setups, I would just watch this. Here we are, we train right on to 200 as we're speaking here. And this is, like I said, there's still some downside. It's suggesting some downside on the, from the standpoint of the PPM2, PPM3, everything is kind of moving down here. This is just a 5 minute chart. So it looks like to me the chart to watch for, and it's going to be in the next 15, 20 minutes. We should, if we can hold above this 200, we'll probably see the markets improve. But everything is basically sideways, drifting lower is how the setup is. So, folks, I just want to thank everybody for showing up today. I really appreciate it. I'm hoping, make sure you tell your friends and spread the word that we're doing this daily, and that this is just going to get better. Tomorrow's going to be, we're going to have a focus on some stocks. Wednesday, there's even going to be macro potential for a guest, which I'll announce ahead of time, probably on Twitter. So if you're not following me on Twitter, you can do that. It's Portfolio Expert, no E in the expert. So Portfolio X, letter expert, and that'll get you to the Twitter handle. So sign up there, and I'm going to be using a lot of that. And I'll probably be announcing each day some of the aspects of what we're going to be following as far as the day-to-day shows go. So make sure you hit the like button. You guys know the drill. like hopefully we'll get a lot of replays, but the bottom line is it's been an interesting format to do, and I found it interesting from my viewpoint, and starting to get myself into a place to watch that. I'm just looking at a couple comments here. Yeah, okay. I'm glad you guys, if you like the new format, maybe make some comments there. If you anything you didn't like, make some comments. Do that so I'll be able to get this better. I mean, this is the first day in this new format, and I've already, in my mind, I've already thought about a couple of things I want to reorganize to make it flow a little better. So it's go ahead and get that going, and we will talk to you tomorrow, same time, 15 minutes before the open. Have a great day. Good day trading. Those of you in the live trading room, we'll see you at 1 o'clock. And then that's Eastern time. We'll see you then. And look forward to our trading session. Thanks again, everyone. Have a great day. Good trading.